Managing the certainty of uncertainty. Now, what does that even mean? My name is Nathan Krampe, and for well over a decade I've been helping families answer that very question. In this short video, we're going to learn about effectively managing your investments in uncertain times. I recently came across an article by Doug Lennox from the Financial Freedom Studio, and he talked about this very subject. He had a quote from Warren Buffett, who is arguably the best investor of our time, saying, "The markets are the world's way of transferring wealth from the irrational person to the rational." Now, what Warren meant by that was that you need to understand that sometimes you have a high probability of behaving irrational in basically the presence of emotions, and especially high energy emotions. Now, translating that to our investments, Doug wants us basically to focus on the fact that your goals and your personal performance is needed instead of investment performance. This is where it's important for you to remember that your performance is not the same as the investment performance, because after all, generating a higher return is really not personal or meaningful at times, because it's the goals that matter. Rather than focusing on the investment performance, ask yourself, what do you plan to use the money for? And when do you plan to use it? Most people know that they have certain life occurrences that are going to happen and they can plan for those, but others may not necessarily be as certain, and you may have to anticipate things that are going to be basically unable to be anticipated. Now, matching your investments and your goals means that you may not necessarily be keeping up with the markets. However, it also means that done correctly, you will have the correct amount of money needed should you have it available and should you need it in the future for your goals. This is the most important part, having the money available when you need it. And there will be times when you need to accept a lower rate of return for a higher level of safety, because the money you need will be needed sooner rather than later. Other times, maybe you can invest more with the stock market for growth because of the fact that your goals are a little farther out. So evaluating your values and your goals instead of your performance is what's needed, and that's a great start. But one more thing is needed to take this one step farther: your values. So your values plus your goals plus rational decisions equals results. Combining the values with the goals and making sure that you don't let your emotions get the best of you is the key to achieving the results that you want. Now, as you have questions, feel free to reach out. I'd be happy to talk through your results and your goals for the future and making sure that the investments you have match your objectives. Take care. Have a great rest of the day.